All right, we are live. The Prospero.Ai stock market live streams. Welcome back, everyone. We have a bunch of great topics to talk about this week. Nice to see the market open up in the green today. We'll see if we could hang on to that throughout the day. You have Steven and Matt here kicking off the stream. We're going to take you through some of the topics that we're going to discuss today, and then we'll be joined by George. But before I run through my topics, I'll let Matt take you through what he's going to be discussing.
Hey, everybody. Thanks for joining us today on the Prospero live stream. We sent out the letter yesterday, and George, our CEO, George, wanted to take a minute at the beginning of the letter and talk about net option sentiment. For those of you that are new, or maybe you're not new, you've been around a while, then you know that net option sentiment, which is on our app, is like a cheat code for the stock market in so many ways. It is something that I use every single day. It's almost miraculous in its ability to predict, if you will, market sentiment, market direction. If you're not using net option sentiment, and you're missing out, and you really should. And there's a lot of traders that have been around a long time on X that are amazing, 200, 300,000 followers that are using it all the time. And so we're going to talk a little bit about that. Great day to talk about it because the market's green. But QQQ and net option and SPY net option sentiments are really low still. And so George is going to unpack that. Excuse me. And then we're going to talk for just a minute about something we talked about in the macro section of the newsletter about how jobless claims are increasing at a significant rate. Like the non-farm payroll numbers just came in and they were way below expectations, which is not a good sign for the economy in the United States. And yet the S&P 500 is increasing, and there's been a divergence, which has not happened in the last 25 years, maybe more. That's just as far back as I saw. So we're going to talk about that and maybe answer the question like, why is there this massive divergence? Why does the stock market keep going up, but the economy is not looking good? And why that's happening and what it's going to look like in the future.
That's a super interesting talking point. I can't wait to hear that discussion. And then we'll switch over to some of the topics that I got, which are kind of building upon the points you brought up almost already. We've seen big tech kind of lose its leadership in the market recently, and maybe that's why the market's slumping since those stocks are so big. But we have two of them below the 200-day moving averages. I'll share which ones those are. And then are we going to see the other ones kind of lose that as well? Or are we going to see these two catch up? We'll dive into that. Then we have Disney and DirecTV disputing over contract negotiations. It's going on almost 2 weeks now. It started September 1st, a blackout for DirecTV customers. Hello, George. Welcome to the stream.
Hello.
And now DirecTV has filed an FCC complaint against Disney. So we'll talk about which stock this dispute hurts more currently, Disney or AT&T, which is the owner of DirecTV. Then we have two stocks added to the S&P 500 today, or the announcement was today. If you guys know which ones they are, comment in the chat right now and let us know. We'll know that you guys are up on the news, but I'm going to have to hold off on telling you those names until that story, so you have to watch the stream till then if you're not unsure. Then, unfortunately, we were talking about this before the stream, and unfortunately, Matt is in the bullseye for this one possibly. There's a hurricane forming. It's only a tropical storm right now, but later this week it could impact the Gulf Coast. So we'll talk about what that means for the market, and hopefully it's not as bad as it could potentially become right now. Then we have Elon Musk. There's been a space battle between the billionaires, Elon Musk, Jeff Bezos. They've all started their own space companies. Looks like Elon Musk is currently winning the battle. There's some pretty insane stats about SpaceX and Starlink and the amount of satellites that they've launched. He owns over 62% of all the satellites traveling in Earth's orbit right now. Pretty crazy. So we'll talk about, Elon Musk, a popular talking point on the streams. We'll discuss some of his other businesses besides Tesla. And then we have two more macro stories to finish off today's stream before the model portfolio update. One about the yen carry trade, which if you guys remember in early August, weighed very heavily on the market. We'll give an update on what's happening with that. And then I'm sure all three of us will be watching this tomorrow night, the presidential debate, and we'll talk about how it's going to affect the markets this week and going forward. But without further ado, I'll let Matt and George kick off today's stream.
Man, I've already decided I'm not watching that presidential debate. I have heart disease, man. I don't need the stress. George, love to have a little fashion update, man. What's going on with the shirt? Is that something that your girlfriend got you? Did you come up with that yourself? Explain where you got that shirt.
Haley was just laughing in the other room. No, that's I got this for myself, as I do almost all of my clothing. This is a shirt that I got for my Berkeley speech when I was doing that. Typically, like this is Versace, and I have a tradition where every year I beat the market, I buy myself a new Versace shirt as a nice little reward, and I stock them on Poshmark in there. But this was a bit of an extra purchase before I spoke at Berkeley, because I wanted some nice threads for that speech. But yeah, I have some pretty good big investor news brewing, and then was in a good mood today, so it felt like being a little colorful.
Yeah, man, I love it. There's very few people that could pull it off, George, but you can. And so
there's matching shorts to this.
For those of y'all that don't know Haley, his girlfriend, she's amazing. But George, in the newsletter, we spent a little bit of time at the beginning talking about net option sentiment. And when I was introducing it just a minute ago, talked about, man, for those traders that follow us, they're new to Prospero, maybe they aren't new to Prospero. If they're not utilizing net option sentiment, which is in our app, one of our short-term things that we measure, then they're missing out. I use it every day that I'm in the market, especially QQQ and net option sentiment. Every single time we release a newsletter, you're releasing a bullish line and a bearish line for those two things. It's just really central in many ways to what we do here at Prospero. Take a second and just talk about net option sentiment. I was writing it yesterday, and I found out I was actually even a little wrong on what it is and how it's measured. So talk to us. Tell us about what is net option sentiment and why it's so crucial to what we do here at Prospero.
Well, it's complicated, so I don't blame you for not getting it perfect. It's taken many years to develop. One thing that I just want to say right away, because someone asked in the newsletter at the end, they said, how do I find QQQ net option sentiment or SPY? And I just want to make that, before we start, very clear. Just go in. There's a search bar in Prospero. Just type in the same way you'd find any stock, type in QQQ or SPY, and it'll come up. A lot of, I'd say first, the confusion is a good way to talk about like the difference between what I saw, the problem with a lot of options metrics and, net option sentiment. Like a big problem with open interest, for example, if you're looking at the total contracts open on something, a big problem is that number is only generated once a day by the Options Clearing Corporation. So whenever you see that number, you're seeing yesterday's number. And there's different ways, like if you're very skilled, and some traders certainly do this, if you're going to look at volumes, but it's very hard to get a real-time understanding of the open options contract. So in order to get that understanding, which is essential because options are these, high levered instruments that people trade, sometimes in the very short term that institutions are making their bets on. So we care a lot more about pricing, and we care a lot more about consistency in pricing. So we're looking overall in net option sentiment, the extent that calls above where the stock is trading are priced above puts below where the stock is trading, and the comparison to that. So, when you look at a stock, and we've only really seen two, NVIDIA this year, Tesla last year, that are like really fixed at the top at 100 net option sentiment, you'll only see that if institutions are overwhelmingly paying more for options contracts above where the stock is trading versus below. So there's a nice little intuitiveness there. And because it's prices, you get it, refreshed throughout the day. And that's like a really, really good metric for that reason, because it updates every 3 minutes for us.
Man, I love that. What I was getting wrong is I just thought and I was trying to be simplistic in my explanation of it in the letter, but I thought we were just measuring the number of calls versus the number of puts, but it's a lot more complicated than that. You're actually looking at people that are placing calls above the strike price, above the current price of not above the strike price, but above the current price of the stock. And so these are institutions that are overwhelmingly bullish. Do we see Meta? We see that a lot of times at 100 net option sentiment. Is that one that we've seen a lot of?
Well, it's been at 100 upside breakout, which is a good, that's a nice, and it touches there, but it's not necessarily, I would say, the most popular one. And that's actually a good segue because we also use those options formulas for the long-term options markets. But instead of net option sentiment, that's like crunching together and netting out based on the name, call demand pricing and put demand pricing. Actually, the call side goes in upside and the put side goes in downside. So we're separating that out a little bit when we look at those numbers. So there's a bit of a different feel in the long-term markets. But yeah, we really created those. And that even goes back to my history of not really, even with good value investing principles, not really being able to ever get what I felt was a good live look and decision point during a day of trading. And that's why we invented it. And it's highly effective for that purpose.
Yeah, real quick, question I've gotten a lot from people that are new to Prospero is, so you look at Tesla, it's got 100 net option sentiment, or did for a long time. That's why we jumped into it. Why is 40 the bull line for QQQ and SPY?
Oh, that's a great question. Well, I mean, some stocks are going to run higher and lower, and that's just how it goes. And like the classic example and why stocks are going to run higher or lower is dividends. And I would say especially dividends, just because you don't want to hold options in a dividend stock because options don't pay dividends. You have to have shares to pay dividends. So just by their nature, if you think a financial stock is going up, you're much less likely to play an options bet on it than you are with a stock that doesn't pay dividends, like a tech stock. So tech stocks are going to run higher. So that's like the first thing right there. But things like SPY and QQQ are going to have an additional thing to that, which is institutions primarily hedge market risk using SPY and QQQ, depending on the market. We've actually seen at various times this year different amounts of hedging for those things. So that's really the big thing that we're talking about on that front.
So, and forgive me because I ask stupid questions sometimes, so just laugh at me. But so, like, let's say, for instance, an institution is long NVIDIA, then they might hedge by getting a put on QQQ, and so that keeps the option sentiment lower. Is that am I hearing you correctly?
Yeah, exactly. If a lot of people are buying puts, that's going to drive up the prices of those puts below where the stock is trading, and that's gonna get the behavior that you're talking about.
Awesome. Last question here on net option sentiment, and we'll move on. But I think today is a great example of something I'd love your input on. All right. So the stock market, at least the last time I looked at it 10 minutes ago, was really green across the board. Lots of stuff up today. But then I opened up the Prospero app and QQQ net option sentiment was at 2. And that is very, very, very bearish. And so, man, what can we learn from that? You got a green day, but net option sentiment is looking really negative. Talk about it.
Well, I mean, you got to think about where we've come last week, right? And net option sentiment is it's not looking at a day. It's looking at a longer view than a day, right? And think about it. We had a horrible week last week, right? The market's up 0.51% today. And just as a little thing going into the day, we're up today and we have 6 shorts and 4. We added 1 more, but it was 3 before the market, before it really started to go up this morning. 3 longs, right? And we're still up. The shorts were correct because we navigated net option sentiment well for the particular stocks that we didn't think would do well today. But looking bigger picture, right? The market could have 1-2 good days and then have an overall like bearish worry to it. I think especially with, the debate tomorrow, I think a lot of people would want to hedge that aggressively, regardless of what's going on today. So we could be seeing like a little bit of a buy, a little bit of a recovery that just basically says, hey, it was a really bad week last week. It's possible people respond well to the debate. So we're just getting in at these prices because we think they might be value while we keep our hedges on.
So for those rookies out there, let me translate. So even though the market's green, we are net short. We have more short stocks than we have long stocks. George is betting that the market ultimately might, in a lot of different stocks, go down. Whereas if we woke up today, market screen, net option sentiments back at 50, you would probably have more longs than you have shorts. And so last question, man, let's talk about the macro part of the newsletter real quick. There was a little chart that I came across on X that I found pretty interesting. Over the last 25 years, if you lay the non-farm payroll numbers chart on top of the S&P 500, they stay incredibly close together. They follow each other almost identically. And then basically at the end of 2023, there was a divergence. The number of jobs in the U.S., non-farm payroll jobs, fell off a cliff. That is typically indicative of an economy that's rapidly slowing. But instead of the S&P 500 following it down, which it's always done, it just kept going up. And so as we stand today, it's the largest divergence that I'm aware of over the last 25 years. Number one, why is that happening? Talk about that. Why is that occurring right now, in your opinion?
I mean, I think we're talking about what we always talk about, which is AI. I think not only are we kind of seeing what you might call economic value beyond workforce, right? We're starting to see that kind of eclipse it. And the workforce could be, a little soft, but that economic value is being created. And just do you remember, because like a lot of people say, oh, we're not using AI yet, it's not generating revenue, blah, blah, blah. But there's still obviously clear value that people are putting in AI that's going into the market, right? And I think we're just going to see that more and more. And we've talked about it. We've made this prediction a number of times. I do think, next year, the year after, I think it's only going to be a matter of time before we see an economy that's growing, but also facing job loss numbers that you would typically only see in a recession. I think it's a ticking time bomb.
Is that because AI is taking people's jobs or replacing humans?
Yeah, absolutely. Or either straight up replacing the jobs, or it's taking things, or it's just like making people more efficient so they can like do the work of more people. I guess that's a different way of saying taking jobs, but I think, there's the pure like replacement that people think about of like, a robot doing fast food, which, I think is also coming. I remember doing a story on that. And then there's the other thing of just the person that can do the job of them and what used to be people below them by using tools. So they just need to hire less headcount because people can kind of be like scaled up, if you will, with these tools. But it's here, it's happening.
Yeah, it's interesting. I have a friend that is a private wealth manager in the Kansas City area. He was on Forbes magazine, top 50 private wealth managers in the country. And man, he and his entire team are completely freaked out by that divergence. They believe it's because of AI too, but they just kind of consider it unprecedented territory, and they're hoarding cash like crazy. Man, what do you think about that? You think that's smart? You think that's too aggressive to be hoarding cash in this uncertain environment?
Well, I think it makes sense for an asset manager that is not using AI to be hoarding cash. That makes the most sense. I mean, obviously, we always throw ourselves into the market. Like, we're happy to do that. Like, we leverage AI. So we feel that our tools are well positioned to manage this market. And indeed, that's one of the things that we think make option sentiment work so well, because we think it's actually easier to detect robotic trade signatures than it was to detect trade signatures from a smart human. But it makes a lot of sense for an asset manager that like knows AI is here, but doesn't necessarily know how to use it to be defensive, right? Because for them, they could be in trades that are just gonna or strategies that won't work in this new world. So they're being defensive. Like, it makes sense to me, but my personal philosophy is always that you'll never learn about the new world, the new investing strategy, if you don't try and learn actively. but I don't think it's a bad strategy for them.
I love it because one of the brilliant things about Prospero is it helps us navigate on a daily basis stuff that is completely freaking out some of the top money managers in the country. Hey, appreciate you having me, George. We'll see you next week. You and Steven have a great rest of your time. Talk to you soon.
Thanks, Matt.
Thanks for joining us, Matt. And I do want to continue pulling on the thread of, how we were saying the QQQ net option sentiment has remained low, even though the market opened up today. But I will say it has been kind of selling off throughout the day. So maybe we'll continue to see that. But so with big tech has kind of lost the leadership of the market. Obviously, NVIDIA, and we've covered the saga that stock has gone through since the earnings. But there's now two Mag 7 stocks below their 200-day moving averages, Microsoft and Google. And Google has really broken below it. They obviously have a bit of their own problems with their antitrust stuff that's going on. But so out of the 7, now 2 are below it. Do you think the other 5 will kind of have to test the 200-day or meet those ones down below? Or do you think the two that are below will come back to the others? How do you foresee the big tech Mag 7 stocks over the coming weeks and months?
It was Google, and what was the other one?
Microsoft.
Yeah, I mean, I think those are. I think it makes sense that those are lagging, for different reasons. And you might say that those are the two biggest pure AI plays in terms of how we talk about the actual tech. We say we differentiate between chips, which is AI that's actively being purchased now, versus AI that's more needing to be monetized more in the future. But I don't know. This market is a very tough market to read. I know it's going to be volatile, and even something we're talking about, we're going to do the debate. I could easily see, pending the debate, either scenario happening. And that's why I think we're seeing such aggressive hedging today and a bad week last week, because I think we're also just looking at a situation where there's so much trepidation in the market, and there has been, and we've been calling it out, and we've been a lot of weeks using that to our advantage, because volatility can be good if you use it well. But it makes specific predictions very hard because it's so based on the data, and we're kind of protecting ourselves both ways. One thing I also did want to say, I saw on our YouTube channel last week, someone said, oh, George can't keep off his phone or something. And if that person is watching or watching this replay, I'm looking at the markets for you guys. I'm not texting my friends or whatever. I'm just making sure everything's going okay, and I don't have to exit any of the picks or give you guys new news or anything like that. So apologies if I've offended anyone's delicate sensibilities, but that's pretty much what I'm doing all day, looking at the market so I can help all of you.
So I think the two, so the Mag 7 stocks, they kind of trade together, even though they have their own stories and whatnot. I think Apple and Tesla are the two that have actually, Meta too, have stayed closest to the highs and performed the strongest very recently, while Google and Microsoft have been lower, and even NVIDIA kind of. So I think we could kind of, I know we were going to talk about the debate later, but maybe we could just work it in now, because I think maybe post the debate or maybe some other event, when it becomes more clear the direction of these stocks, do you think it'll be a good trade to either short the leaders or buy the ones that have dipped once it becomes clear for a catch up in either direction?
We don't really like to look at things like that. It might be, we'd look at net option sentiment for the leaders or the laggards, but that's not how we really approach investing, right? If it appears on any of the screeners, if it looks good and it adds to the story, then yeah, I think we could play it one way or the other, whether it's, we're not going to play it one way or the other. Let's be honest. We're either going to buy the laggards, Google or Microsoft, or we're not going to do it, because our signals never are going to sour on Apple or Meta or anything. I really wouldn't expect it enough that we'd short them. That's just not really how we built the signals, because there's very real risk involved in shorting those stocks. But yeah, it could be a situation where Microsoft and Google look like good buys, certainly based on the fact that they've been hit.
And so, with the debate tomorrow, what are you expecting coming out of that for the market this week, one way or the other? I'm sure something will be said that will affect, some area of the stock market. So, how are you feeling? Do you think that's going to affect the way you like make moves this week?
Well, one specific scenario I'm going to be interested in is if the general feeling is that Kamala did better in the debate and the market goes down as a result. Because there's two things I'm looking for there. One is like, does the market think that Trump is going to be better for it? Then, Democrats are typically good for the markets, right? Or are people also worried if the election doesn't go Trump's way that there could be problems? Those are two events that I'm like looking to be like reaffirmed. So we'll see. That's one specific scenario I'm going to keep a very close eye on. Then on the other side, right, I would expect if Trump is viewed to do better, that the markets would rally. I think, he has a very clear goal of using policy to push up the markets. Now, I think last time people don't necessarily talk enough about how those policies also created inflation, because that's what happens if you essentially print money to give tax breaks and prop up the market and do those things. So there's both sides to it. But, I think we'll definitely see if the market reacts, positively to that. And then, I mean, the only other thing, and we've talked about two kind of clear scenarios. If there's kind of more uncertainty around like who won, there are some people who think that means the market is that there'll also be problems with the market because the market wants a more clear leader. The market doesn't like uncertainty. So there's a lot of scenarios to watch, but it's going to be must-see TV.
I agree. I was shocked when Matt said he's going to stay away from it. It's like, it's like a car accident. It's like you can't look away. It's like, I can't wait to see how many people actually tune into that. I'm sure it'll be, I don't know, 50, 100 million, something like that.
It's gonna be crazy. I mean, I heard for a while, or there was rumblings that he was gonna drop out of it. We'll see. He's very temperamental. He could end up. I'm not 100% sure that we're getting it, but it definitely is gonna be. It's good. The one thing that I'm actually interested, like, we don't know anything about Kamala's strategy, but it is gonna be pretty interesting if it turns out that Kamala is going to end up like hitting Trump for being old when Trump hit Biden for being old, and like what the response to that is. Because I mean, pretty much anyone looked young next to Joe Biden, right?
Mm-hmm.
But like Trump definitely looks old next to Kamala. So that'll be interesting. I mean, I don't know if that's going to be in the strategy. Like, I hope the overall like level of discourse in this is a little higher than the last one. But hey, this is going to be the first time we've ever gotten like, I think, a presidential debate with like two different sets of candidates in the same election. So at the very least, we'll see history there.
And this might be like my USA egocentric self speaking, but do you think like people overseas and the businesses, how important USA politics are for like the global markets? Do you think people overseas will be watching it too, or do they like? I've never watched a presidential debate of another country, so I don't know if it's like I'm speaking out of pocket there.
No, I think you're definitely right. I mean, it depends, and it definitely depends on like the extent that people are involved in international politics or their businesses are involved. But I definitely think the Chinese government will be watching.
I saw some like tariff headlines.
Yeah, just to name like one, and Chinese businesses, I'm sure they'll be very interested in what gets said.
Mm-hmm. And so there is a content dispute going on in the world of entertainment right now. Disney and DirecTV, which is owned by AT&T, there's currently been a blackout on Disney Channel since September 1st. So, we're going on almost 10 days now of this. DirecTV just filed an FCC complaint for bad faith negotiations. Do you think that there's any credence to that FCC complaint? Like, could anything happen to Disney? And then the longer this blackout goes on, who does it hurt more, Disney or AT&T?
I mean, first of all, like, I'm wondering if like we need some archaeologists to analyze this situation, because these are some dinosaurs fighting this fighting this battle over like some cable TV here, and like that's like, you know, a cable TV battle that like involves someone like whining to the SEC to get like that just seems like something that was done in like the 50s. But no, I think I you know, it's kind of what we talk about with like this content stuff generally a lot of the times, where it's like these businesses are both like in trouble and they need to like kind of extract from each other like whatever they can. But yeah, I think that it's just like, especially with the SEC thing, I don't think people like, they clearly don't know how like it reflects on them. It's like, even if like, you know, going up like your personal life, even if like two of your friends are arguing and they can't resolve it, like it doesn't reflect well on either of you. And like, it takes like, you have to be pretty immature to think that like you're going to be the one that's viewed positively in the argument. They should just settle it. It makes them both look bad. Like that's what always happens in these situations, because they're arguing about like, you know, probably small fractions of transaction costs or whatever. And they just need to meet in the middle because they both need this. They can't like, DirecTV can't not have Disney, and Disney needs to be distributed in every place that it possibly can, given what's happened with their business and stock price in the last couple of years. So it's just like stupid bickering.
Yeah, so we'll see how it plays out, and if some DirecTV customers revolt against the service they're getting. I see a question in our chat from Bob. Hello, Bob. Do you like Magnite?
I'm taking a look at it now. I mean, I did like Magnite, but not so much right now. Like, it opened the day at 70 net option sentiment. It's down to 60. Like, that's near like the low in the last 2 weeks. I mean, when it had higher net option sentiment, when I was picking it up, in as a small cap, it looked like a good thing. But now, yeah, not so much. And small caps don't really look that good overall.
Yeah, small caps have just continued to just it's like that. If our viewers are following the IWM, like there's been 2 pops over the past like 2 months, but it's just instantly faded, and I don't know what it is. Well, when I maybe you could explain this. When I see that, like it almost seems like a manufactured pop by like the algorithms that you talk about to kind of just like get liquidity to get out of whatever positions they don't like or something, because there's no like lasting buyer in that index and those companies. So do you think there's anything to that? Like, because we have seen it like pop up twice now, but it just instantly goes back down.
The way that I see it is it's all like, I do think it's algorithms, but it's like relative value algorithms. I think basically like the large caps and the small caps get separated enough that the small caps become relative value buys, essentially. Because like a lot of them, like when you think of like, you know, throw out the cap for a second, like relative value buy comes in when you're looking at, you know, certain trades on growth multiples or certain trades on value multiples, right? Like the comparative value of that gets to a point where algorithms see the value. And I think that's just what we're seeing. Like we're seeing these bottoms, but like to your point, it doesn't last, because when it goes up a little bit, then those multiples start to become more in line. And then, you know, large caps or other things, you know, become, and we saw a big trend to value, right? I think that's kind of how the last small cap rally landed. Like, I think the one before did kind of go from small cap back to like large cap growth tech, but this one was different. Like then dollars started to flow into mid cap and large cap value. So, you know, it wasn't necessarily one thing, but that does lend to the relative value argument well.
So I guess the solution to this problem for the small cap stocks is you have to grow big enough that you're added to the S&P 500, like these 2 companies that were just announced today. Palantir and Dell will both be added to the S&P 500 Both stocks popped on the news. We talked about the stories before, but maybe if you just want to share your thoughts again about, is it a long-lasting, bullish thing to be added to an index, and how does it affect a stock in your view?
Yeah, I mean, obviously it's a good short-term thing. I mean, it's nice because you just get stable buyers, right? But it's not always in a bear market. It's not always the best thing because you'll also have stable sellers, right? You'll have stable shorters if you're in the S&P 500 and people are shorting the S&P. If you were just a company that was outside of it, you might not be targeted in the same way. But overall, it's a good thing. Overall, like, people buy the S&P 500 a lot more than they sell it. It's a nice, stable situation. I mean, I think Dell had to be in it before and leave and then come back. I'm sure if you ask Michael Dell, like, how he felt about that, he would say he was very happy to be back. I'm sure, like, their stock price went down a lot since being dropped from the S&P 500. It's just a nice base, right? It's easy to forget about a company like Dell and just have it like fall in the background of like all these other like much more modern computing companies, but impossible to forget about a company that's in an S&P 500 because people are always buying the S&P 500, and whether or not you're buying Dell, you're buying that.
So now both those stocks sound more like QQQ NASDAQ stocks to me than S&P 500. So do you know like how the S&P 500 chooses which stocks? Do they try to keep it like balanced across sectors a bit?
I actually did a project for McGraw-Hill Financial in my last company predicting index ads. So I actually know a lot about this. And they refuse to tell anyone about it. Like, they will acknowledge that it's derived from market cap, but the other things that they'll tell you about, part of it is balance, right? They don't want to overweight certain sectors. So a lot of the times if they drop one, they'll look in the same sector. And then the other thing is like, some of it is like public perception. They want companies that have a good public perception, that are excited. They want ultimately an index that, like, especially in this world where we see the value of social sentiment, they want an index of recognizable companies too. That's not the only factor. There's plenty of companies in the S&P 500 that people have never heard of, but it does factor in the name recognition, because by the flip side, they don't want you to look at the S&P 500 and see 400 stocks you don't recognize. There could be some that are just like value stocks, like chugging along, that you might not, but they want you to look at the index and see companies that you recognize. They need to be large market cap, and it needs to balance out sectors.
Interesting stuff there. I would love to know one day. Maybe we could find out the actual methodology for choosing which stocks go in by them. Maybe they'll give us a secret one day.
At the end of, I mean, I just told you, at the end of the day, like, they're putting their finger in the air at the end of the day, right? So like, there is like, having an actual methodology would mean that there were set rules, and they're very open that they're not set rules. So what I told you is the best you're going to get, and until a robot's doing it.
Yeah, imagine an S&P 500 rebalance like every day from a robot. That'd be crazy. Maybe one day.
It would be brutal for those stock prices.
Yeah, whipsawing back and forth. So the next topic I want to bring up, Elon Musk, although we're not going to talk about Tesla, although maybe we'll work it in somehow, but we're going to talk about his other companies with this story today. So Elon Musk and Jeff Bezos have been at this billionaire space race for a few years now. Seems like Elon Musk might be pulling away like further in the lead than maybe Jeff Bezos would care to admit. SpaceX launched its 7,000th Starlink satellite, and now SpaceX has accounted for 62% of all the satellites that are, traveling in Earth's orbit. So how long until, one of these other Musk companies comes public? Like, is SpaceX, you think in the next year or two, like, going to be a public company?
Probably. Yeah. I mean, they like, that's very much Musk's style, to get it to a certain level of, I mean, I think he did a little earlier with Tesla, but to get the company to a certain level, then get a lot of public excitement. I mean, it's going to be another company that, like, they'd be stupid not to, the way it could get public attention. But it's such an interesting, beyond like all of these, like, beyond like the billionaire dick measuring competition around these spaceships, which is funny because they're such perfect like phallic symbols as well. So it's like literal and figurative. But beyond that, that is just like I think the only way to describe it is hilarious. Because like a lot of it's like couched in this like, oh, it's for humanity, blah blah blah. You know, it would be better for humanity if you all like pooled your resources and did one spaceship company instead of this dick measuring competition. But regardless of that, it is kind of an interesting, we have some of these dynamics and we see it a lot. We see it with like Google's like self-driving car tech being something that the military, DARPA wanted, where it's like you see private companies getting ahead of the US. And this is just another example. And I think a particularly embarrassing one for the US, like with NASA basically like having, as close to unlimited funds as you can get, because like we have things like and the justification is a good one. We've had things like the microwave that have come out of NASA and their tests, and that like it does help humanity, and there are inventions that come out. But it's super embarrassing to have that like kind of like huge government, unlimited resources, and then have this like private company come and build better spaceships for you. That's kind of like one of these signs of like the decay of America. I think that, all of these resources can't be utilized in a more efficient way than private companies can.
Now, here's, I think, an interesting follow-up question on this topic. So, do you think SpaceX has the possibility to become a bigger company than Tesla one day?
Oh, definitely. Without a doubt. Just because, I mean, if you compare like cars to what SpaceX could be, right? And the flight, like just think of space tourism and the cost of a flight to get on, one of those spaceships, let alone like resource mining, government contracts, exploration. He's trying to build a goddamn colony on Mars, right? Think about like what he probably like, who owns the real estate on Mars? I don't know who owns this real estate on Mars. Probably whoever can build something there owns the real estate on Mars. So all of a sudden, I'm thinking SpaceX is building Mars condos that are, probably $1 billion a pop. So yeah, that's what I see the potential. And then there's just people that just might want to like take a longer spaceship ride, and that's even more expensive. But like, yeah, we're just talking upside. I wouldn't bet on that happening, because that's like a lot of space business that like, probably not in our lifetime. I would say it might be another generation.
I was just going to ask that. I hope it's in our lifetime.
Yeah, I'm not sure about that. But yeah, I think we could say probably more likely in the next lifetime, but who knows? They're working on extending age and everything now. So we'll see.
Well, if that's the case, it's going to be, well, I guess maybe we won't even be alive to see it, but Elon Musk will have started it, but he won't have finished it. So it'll be interesting how history looks on that,
He's probably I don't think we're getting rid of him. I think there's gonna be like a Musk robot that hangs out with his like basic brain, but there's no way he doesn't have plans to stick around beyond his body perishing. I just am not.
He's also got Neuralink, so maybe that's the play there.
No, exactly. That's how he would put his brain in the robot.
Mm-hmm. Well, we'll see how all this plays out. The tech innovation, as crazy as it sounds, could be like, what's happened in the last 2 decades. It's going to be even crazier in the next 2 decades. So the world's going to change a lot. But we'll see, and we'll keep our eyes on it. Switching up now, major switch up in the next story. I see we've had over 1,200 people in the stream. Thank you all for tuning in so much. If you could like this video on Twitter and on YouTube, that would be amazing. Share it with your friends if you find this content valuable. It's been a quiet hurricane season for the U.S., thankfully, but there is a tropical cyclone brewing right now, and it's projected to become a hurricane and possibly hit the Gulf Coast in the middle to the end of this week. Could that impact the market? does that impact? I off the top of my head, I would think energy and oil companies maybe could be impacted by it. Does it have to be really bad to kind of weigh on those stocks? How do you feel about that happening this week?
Yeah, I mean, I feel basically like unless things are really, really severe, these things don't affect the stock market too much. I mean, I think there's the practical side. You're right. If oil drilling is interrupted in specific regions or whatever, I think those companies will probably be targeted. Maybe like the energy index in general. Maybe not a bad idea to add like an energy short. Now that I'm talking about it, but yeah, I mean, to me, it pales in comparison to unless it becomes like a humanitarian crisis or whatever. Like we're not talking about like Katrina. That was obviously going to really affect a lot of things. But yeah, I mean, it probably is nothing compared to the debate tomorrow, for example.
Do you remember how something like Hurricane Katrina affected the market? I'm just curious because I wasn't paying attention when that was happening.
That's a
Like,
good
was it
question.
I'm wondering if it was like the story for the stock market of like the time that it happened, and if the market dropped.
We're gonna
off of
look.
that.
We're gonna look right now. I mean,
And
I don't remember.
I don't want our viewers to, we're talking about like hurricanes and affecting like business, and obviously it affects people. So I just want to try to like
All right.
go about this easily.
2005. August 29th, 2005. We're going back. I need to I'm like squinting here. All right. 2005. Okay. So the day of, you can't get all the days here. Okay. So August 15th, I'm better off. I got to just grab this data. This is going to be annoying. It'll only take me a second longer to grab the data. Oh God, Google Finance is terrible compared to Yahoo Finance. All right. Historical data. Max. We're going to get these answers.
While you're looking, I'll say, both of us East Coast people here, that's one of the benefits of the East Coast. You don't get really many hurricanes. You don't get tornadoes. You get a few snowstorms here and there. But besides that, not a lot of severe weather. Although I did get an earthquake earlier this year.
It was very minor.
Yeah, it was not bad.
Okay. We're doing it. All right. August 29th, 2005. Looks like the market went up the days following Hurricane Katrina.
Interesting.
Yeah, so not even that. Yeah. On the 29th, the adjusted close was 129.69, and like a few weeks later, it was 124.60.
I would not have guessed that.
Just like straight up. Yeah, it didn't even go down. Not even one day. Oh, actually, it did. The 30th, it went down from 129.69 to 121.05, but then it went up to 122.58. So maybe one day slightly down. We don't even know if that was about Katrina.
Yeah. All right. So I guess we'll just hope everybody's safe if this hurricane comes to fruition, but looks like it won't be affecting the markets too bad no matter what. I have one more topic to go through. I feel like this is kind of sneakily happening underneath the market surface. I don't hear this talked about a lot when I watch stock market coverage or read a lot of stories about it. But now that time has passed, we got that severe dip in early August, kind of out of nowhere. But it seems like it was from the yen carry trade. The yen versus the US dollar is something that's reaching the same levels that it was in that first week of August, which caused that sell-off. Do you think if this continues to head even like in a worse direction, that it could again weigh on the market? Or was that washout in early August like enough to kind of get all the leverage or whatever was in that trade out of the system?
I mean, if there's one thing that you can count on Wall Street pretty reliably for, It's that they don't need to learn a lesson too many times. So my feeling is after the first time, they probably really cut down their reliance on that form of leverage, or hedged out of it a little bit. There is, different kinds of options, but yeah, I mean, I wouldn't expect it, but you also never know, because just like sometimes it's hard to get out of those trades, right? It's hard to make the moves. Especially if they're dated certain times. That's why but like, I would think they're at least hedging. I wouldn't expect it to have the same huge impact now that they've kind of seen it happen.
So with that story, that's the end of the topics I have for today. I see the markets are all kind of, they were selling off, but they're kind of rebounding now. So I'm interested to see how the model portfolio update goes when we switch over to the other side.
Yeah, we added some. It's a good day for us to start. DigitalOcean is at the top of my list, our long, and Herbalife, one of our shorts, is at the bottom. I always like to see that, but we'll make the switch.
Yeah, we'll see you on the other side. For the chat, one of I think the most powerful points that our signals, like when our signals are performing, when the market is moving against our picks. So like say we're net bearish, but the market opens up green, but our portfolio still outperforms on the day. I think that's such a powerful signal for the way our AI tech is able to read what's happening within certain companies and predict, even on days where the overall market is against you. So I love seeing days like today. What I want to do now is I want to get an updated SPY and QQQ net option sentiment. If you were here in the beginning of the stream, the QQQ was in the single digits, I think maybe 2. It was either 6 or 2, but we'll update it right now and see where we're at. Maybe we're going to get a little bounce, or maybe not, because I just pulled up the QQQ and it is at 1. So not looking very, very bullish at all. I would be a little bit skeptical that this reprieve bounce, maybe you could call it, now that we have a 1 for net option sentiment for the QQQ, will last, but we'll keep our eyes on it. And we'll take a look at the SPY, which recently I think has been a bit stronger than the QQQ. But my friends, the SPY is at 0. So I think we're going to get a bearish George when he rejoins the stream. Those signals are not looking too good for if you're a bull out there. And I would think big cap tech kind of, the market goes as the big cap tech companies go. So probably not a great sign for them. Let's look at the something I always like to check on also is like how the Russell is performing versus the other indexes and the Dow Jones. The Dow Jones is actually the leader today. It's up 1.4% on the day. And then all of the other indexes are around the same levels. The SPY is up 1%, QQQ and the Russell are 0.86%.
Okay, here I am.
George. The SPY is at 0. The QQQ is at 1. Panic in the streets. Sign the alarms.
All right. Oh, did I? I forgot if I forgot. I'll have to update the screener if it's not a bear screener. I think it's a bear screener. I'd be crazy not to have it. Yeah, okay. I would have been crazy not to have a bear screener, and I don't. Okay, I have to check a few things. Let's see what's going on with if I can pull the report that I need. No, whatever. I'm just gonna ask. All right, I'm just gonna get that. And then I'm going to start setting up the letter.
To detour from stocks for a second here as you're setting up, if anybody watches the NFL, if you watch the Giants, I was booing them loudly on Sunday. Bit pathetic.
But you went?
I went. My uncle is a season ticket holder, so I got lucky. I was the chosen one for opening day, and it was a train wreck though. So
We have season tickets that we don't use
Oh,
because
yeah?
John Mara offends my family.
My uncle, he's had them for a long time. He went to 0 games last year. He's only going to 1 this year, and he's looking to sell his tickets. So that's the state of the Giants
I
franchise.
don't think we even sell them. I think we just let them. I think we just let them go bare so they can feel our disappointment.
Oh, the fans were not happy. Rightfully so.
I've never seen anything like the weird Daniel Jones commitment to just like a horrible, like, he's not even a good player. He had one like season where he was mediocre, where Brian Daboll put together a really good offense for him, and he should have never. He just like John Mara's got like some kind of love affair with him, and like I don't even say that lightly because like when he was drafted, the old GM who was an idiot, Dave Gettleman, said they were in full bloom love. I believe it. Like this looks like this looks like someone does out of love, not out of like logic about team building.
Yeah.
All right. I could rant about this all day, and nobody came here to hear us talk about football. But maybe someday. All right, so I put these in.
Small caps look like they continue to lag, which is exactly what we expected. We may not target them too much. Because we already have decent exposure.
All right, I'm just gathering. Okay, let's see. Long tracker. All right, let's get it. This annoying thing again. Okay. Yeah, it's just like keeps refreshing so fast. I can't even look at it sometimes these days. Oh, there we go. Okay. Gotta go quick. All right, I think PG, MCO, OLNTH. Made a good run there. All right. Definitely CTAS. Really? I don't think we need any eBay at that. Oh no, because I think it already was low. We'll do 1 of 2. Okay. 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 There we go. We're done. That. And then we're just going to do one of our new favorite things, which is just, oh, the move score came right in time. So we're doing move score. All right. This, oh, actually, we want. Got to work on this tab situation. Too many tabs.
Gives me secondhand tab anxiety.
What is VVV? I have no idea what that is. Doing very well. Not great technical flow. I don't know how much I love that. Let's take a ride on that. Oh, GME, why not? All right. God damn it. Damn, Elf has a very low move score, but I still don't think I'm gonna get it because I imagine its signals will be too high. But we can see. Yeah, wow, very low options. I don't think I have the guts to short it, but well, maybe we'll do one. We'll see. This looks like a great short. I think I might short this right now. MTSI.
I'll read off some of the signals for our viewers. How MTSI looks in Prospero: 63 downside versus 40 upside, so higher there. Not a lot of short pressure, so not a problem there. 18, only 39 net option sentiment. Definitely bearish looking.
I think I'm probably just gonna wait a second on that though. I looked at it. It didn't look like I wanted to act on it immediately, but I'll do it for the trading ladder. All right. We are now going to All right. I think that's it. Any last call for questions?
I don't see any questions. I'm super interested how today and the week is going to play out with net options being that low. Clickety clickety. He likes your keyboard.
Oh yes, I love my keyboard too. Thank you. It's I just like put him up there. Yes, thank you, Dave. We appreciate your appreciation for my keyboard. All right. Thanks a lot, everyone.
Thanks for tuning in, guys. See you. We'll be back next Monday, actually.
Oh yeah, enjoy your break, Steven.